Thanks so much for tuning into India Market Close. We have a big market voice in Manish Chokhani, a big market and economy voice in Manish Chokhani coming up in a couple of minutes. But we'll make a quick market check to just give you a sense of what's happening. It's been flat. In some sense, the headline numbers have looked flat, even though we started off, went up about 0.75% and then have come off from those highs. So in some sense, off from the highs, but flattish. Mid caps and small caps were very, very active at the start of the trading day. Currently, the mid cap index has come off completely and is trading flattish or marginally in the red. The small cap index still holding out though. The market breadth is difficult to call, but the small caps certainly should have an edge, and maybe, just maybe, the advances outnumber the number of declines. Yes, they do, even if they come off a little bit, but still in favor. And the heat map very quickly, just to show you what's moved and what's not before Tamanna takes over the mid cap end of the market. Cement and Aditya Birla Group right up there. So Grasim and Ultratech up about 3% apiece. There is also strength in Hero, Nestle, Axis Bank. So it's a very different set of stocks which are powering the index up ahead today. Clearly, defensives are to the fore because I see HDFC Life, NTPC, Nestle, Power Grid, Cipla. I mean, a very unusual set of names which are trading high today. And on the flip side, it's IT, which has been taking a beating after having a really good run in the recent few past. Is the same template the mid-cap and Tamanna?
Largely, and Niraj, perhaps one of the reasons, if I had to hazard a guess, is look at the first two big announcements that have taken place in Modi 3.0. The first thing that the Prime Minister has signed is the next installment of the Pradhan Mantri, Kisan Nidhi Samman, which is the 2,000 rupee quarterly, subsidy which goes to every farmer's account. So that's the first thing they've done. We've also learning from sources that the 5 p.m. cabinet meet today, which will be the first meeting for Modi 3.0, will give a go-ahead to building 2 crore houses under the Awas Yojana. So, which is why those are the first set of stocks I want to talk about this afternoon. Look at Aadhar Housing, look at Hutco, look at Awas Finance, look at Home First, because this focus is very clear. That's perhaps why you're seeing some of the steel names and cement names going up. That's perhaps some of the reasons that you're seeing Nestle, etc. up again. So that rural focus and push that we've been talking about right after the election results, visible at least in the first big decisions that have been made. So that's the first list of newsmakers. Insurance numbers are seeing their impact. LIC actually with good monthly numbers, but a so-so impact on the stock. ICICI Pru's doing well, HDFC Life's doing well. Now, relatively, these are looking good. KEC International has an order win. We talked about that in the morning. They've managed to stay about 5% up. Suzlon still feeling the heat because of that independent director resignation, still about 5% down. SIAT has had a good run through most of the day because of that Novama Road note stays, steady there. And Heritage Foods is one that I wanted to talk about. They've had a large block deal, so it's more than just the Chandrababu Naidu impact, 5% up. Railway stocks is the last bit. Titagarh, RVNL, all of them looking very interesting. Titagarh having a fantastic afternoon, 9.5% up. So these are some of the stocks. But Niraj, I think the main focus is where are the portfolios?
Yeah, and you can certainly think of it that everybody's waiting with bated breath about what happens there. Let's see if we get it or some sense of it before 5 p.m. today, because that should be a key number, a key set of data that the market would certainly be watching out for with bated breath. But I must say that a clutch of names have done really well for themselves in the session today. Case in point, Tamanna spoke about Heritage Foods, but look at Ramco Cement. No connection, no direct linkage. But the talk of development work, special package maybe, and therefore cement dispatch is moving up, is really leading to some of these names do so well. We've spoken about KCP having done so well in the recent past. Ramco is a large liquid name which has gained 5% today. But if you look at the last 5 days, I think the stock has probably gained about 125 to 150 rupees. So it's just quite stunning the way some of the stocks have moved. 14% in the last 7 odd days. And actually from the dips, it could probably even be more. So that is the one other very interesting thing that I thought we should mark. There is, and we'll of course watch out for some of the real estate names as well, because it's a select bag of stocks which are moving well. A lot of realty names have come off today. So while Nifty Realty is up 0.95%, a lot of mid-sized names, DB Realty, a case in point, has actually come off quite rapidly in the session today. So individually, some of the names certainly are looking slightly wobbly as well. Amardev Singh, he's head of advisory at Angel One, with us on the show to talk about his thoughts of what could happen in the current juncture. Amar, great having you. Thanks for taking the time out. How are you approaching trade today? Is there a trading opportunity in the index, or would you leave the index alone and focus on specific names?
Yeah, good afternoon. Thank you for having me on the show. So, index basically we are really seeing some increased volatility, and that is along expected lines. But at higher levels, definitely we are seeing some sort of profit booking coming in and some sort of consolidation. But the way the index has bounced back for the last few trading sessions, it seems that the markets have more or less factored in what's likely to happen with the coalition government going forward. And so I think that's one thing. But as you rightly said, sticking to stock specifics is a better idea rather than looking at the index. If one is trading the index, then that's a different call altogether. But overall, I would say that one should look at specific stocks for investing or for trading, for that matter.
Right, Amar, just any call on the Bank Nifty right now and the Nifty IT? Nifty IT taking a beating today, but any kind of a call that you'd go in for on both indices?
Yes, see, Bank Nifty, we are seeing some sort of resistance at the higher level. So today's high is somewhat of a resistance, because that's a crucial. That was around 50,252, and earlier also from similar levels we did witness some correction. But if you ask me for the trend for Bank Nifty or for Nifty, short-term trend definitely remains positive. So what it effectively means is that on the downside, if there is any correction, that's a buying opportunity. But the range is significantly, I would say, larger as compared to the previous few weeks. So because of the, I would say, the impact settling in of the election results. But Bank Nifty short-term trend is positive. On the downside, I would say somewhere very strong support coming around the 49,000, 49,200 levels. On the upside, 50,200, 50,300. That's the immediate zone of resistance for Bank Nifty. But any dip is an opportunity to buy, but one needs to be prepared for volatility as well.
Right. Niraj, even as we wait for those details to come in, and we're just waiting for that cue that Manish Chokhani can hear us, and we can go to him in just a second. All right, I'm told he's there. Hi, Manish. Very good afternoon. Tamanna here, and thank you for joining us. I'm told from Zurich, where it's cool. Political temperatures high up here in India. All the excitement about the portfolios, etc. So since this is the buzz this afternoon, let's start with how you're seeing this continuity, stability in place, and do you think that sort of sets the pace for the country, economy, and markets?
Yes, thanks, Tamanna. It's unusual to be speaking from here, but I can just say that the people I've met over here, I've been in Europe for a while, are actually very, very enthused about what's going on in India. Because Europe itself has been voting in very far-right parties, as you just saw what happened in France as well. So it's not unusual. What the press reports is actually very different from what the people on the ground and the investors here are feeling. And I think everyone here has just been waiting for an opportunity to get in to the Indian markets and to participate in the India story. At a personal level, of course, markets were expecting continuity. I think the seats came a bit lower than what the market expectation was. And we very quickly, I guess, have reconciled to the coalition. And there's a sigh of relief that the strongest ally is actually Chandrababu Naidu, who was the original CEO, CM of the country, and therefore very developmental oriented. And there's also a sense that both the main allies, Nitish and Chandrababu, are now sort of senior and almost towards the last 5 or 10 years of their, sort of careers, where they will actively be running things themselves. And therefore, they may be looking more to do what they can for the states and leave their legacy behind, rather than be doing a lot of bargaining of the sort we saw 15 years ago. So on balance, I think markets, as you've seen, have come back to even keel, as if nothing has occurred. And it comes back to actually what earnings are delivered. by whichever companies are.
Having said that, Manish, and I take your point that markets have come back to even keel. Nevertheless, who is the next finance minister? Who's handling railways? Who's handling telecom, roads, highways? Does this matter? Does the 100-day agenda sort of set the tone, the next budget? Do these become big events for us in newsrooms or for the market as well?
Tamanna, to be honest, I think it's more in the newsrooms because, if someone had told us, that Mr. Jaitley will not be there as finance minister and then he will not be steering the way he had got everyone to have consensus together on GST, one would have felt there's a big setback. So, people, parties, leadership, countries, they transcend individual personalities, I think, over a period of time. And you've seen with this leadership of Mr. Modi that it's eventually his sort of vision which gets delivered. And I take you back even to the days of Narasimha Rao, when Manmohan Singh ji became the finance minister and he actually unleashed reform. But it was only because he had a prime minister like Narasimha Rao who was backing him that sort of thing could happen. Whereas in his own tenure, because he had a different coalition and different compulsions, he got very hampered in what he was able to deliver, despite probably knowing what needed to be done for the country. So I think it's a similar case here. I think the bureaucracy actually can implement whatever other decisions and vision put forward by the leadership. Obviously, each minister at his or her level will matter to accelerate, to get better reporting from the executive arm of the government. But as the PM has already put out, his 125-day program was more about speed of execution. And I loved the way he wrote his article about that we need to now work with speed. We need to think a lot about scale as well as scope to do a lot more with the limited resources and to put more things out there. And then lastly, while he wrote about standards, he also talked a lot about skills in the interview he gave to your channel. So I think what's coming in the next 100 days between now and October should be very exciting, not just for newsrooms, but also for markets to digest and then discount them and hopefully start the next trajectory.
Manish, good morning to you and good afternoon from India. Niraj here.
Yes, hi.
Just wondering, you've been on record now for a number of times talking about how India could be the classic bubble market of the next 10, 15 years, right? Does this election in any way change that belief? I know it probably wouldn't, and it most certainly wouldn't, but I'm still wanting to hear it from you.
Yeah. No, I do feel that we are setting ourselves up for that classic inflow of a gush of foreign money from overseas. So while the bond indices inclusion money has started already coming in, I think the equity flows have been slightly muted, hoping for a correction in the market. And you saw those kind of reactions even just after the exit poll and when the actual results came out and so on. But you saw the speed of response from the local investors, not really giving a break to the foreigners to buy India cheap. And my submission is that at some point, this economic miracle of India will reverse the trajectory of the rupee, and the rupee is going to strengthen dramatically. And at which point, the foreigners will realize that it's a game where this country will have falling rates, a stronger currency, and maintain its high rate of return on equity. And therefore, it's a story that you can't miss. And as we've also always said that there have been three Indias, the 2% Australians, the 18% Filipinos, and sort of the billion people who are, still deprived and looking to come up alive. In the next 5 years, as the market starts discounting this, and it typically discounts front-ended, it's very likely people will start thinking that, the 200 million people who are on two-wheelers are going to come into the 25 million class of, four-wheeler owners and so on. And therefore, you're seeing that happening for example, in real estate and housing already today, that from the Prime Minister's level to put a Garib, Awas Yojana and his housing scheme for all, to the complete up end of the society where everyone's realized they need more space in their homes. It is something unprecedented which is going on. And I don't think this is a trend which is easily reversible. To summarize, I do feel we're going to set ourselves up for bubble type of valuations. I don't love it because it means we underperform. Then after that bubble is formed, So I hope from time to time the regulators and the ministers can sort of keep cooling the market a bit. But having said that, I think the wall of money headed our way is going to be very, very large.
Actually, that was going to be my next question, Manish. I heard you say at the start of this conversation that you've been in Europe for a while. Were foreigners waiting for the political outcome to be out of the way, foreign money that is, and now that it is done, does it come too soon, or is it difficult to kind of call when does foreign money make its way into India?
So, Niraj, there are 2-3 things. One, obviously, if you're an active fund manager, you don't want to take event risk and then be answerable to your investment committees. So the active money managers were all obviously waiting, a bit for this event to get out of the way. Also, once this coalition settles down and, people are breathing easier overseas, but they haven't seen the way we've seen it for the last, 30 odd years in India, that this is actually a very, very strong coalition with, barely 30 seats. And I would expect over the next 3 or 4 months, the numbers will only get added rather than reduced. So the active management side, I think money flows will come. The bigger money, though, nowadays comes from the passive sides and the sovereigns who have to really do allocations. And as we start moving up in the indices as well, it's almost inevitable that, it becomes in a way valuation agnostic at that point. And those are the conditions which cause bubbles. Because like you're seeing in the US now, all the funds keep chasing NVIDIA as it keeps rising because the weightage keeps going up. And the performance keeps coming, and therefore all the momentum trades and all the algorithmic trades all start chasing that. And I suspect something like that is sort of slated to happen here as well.
In which spaces, Manish, as we look at the 100-day agenda, you talked about how this is something that, even the street would want to know before it digests it. In what direction do you see that push? We have some clues from what the Prime Minister has been saying so far, talking about green energy, EVs, made in India defense, etc. And these have already been favorites. Do you see more of the same?
I think it's a continuation, Tamanna. I don't think it's a trend-changing election in that sense. And it is a rotational bull market. So as each sector takes leadership and, something underperforms for a while, then something else comes up. Because look, on a valuation basis, I don't think anyone in my community can come and make a case for any sector really saying that it's cheap. So it's really a belief in what you now call the terminal value of India, that it's increasing at a faster and faster pace as we go along. And as you go from literally being the 5th largest to the 3rd largest economy, the rate of change is what markets typically reward. And I'm sitting, of course, in a continent which Larry Summers famously called a museum when he called Japan as a hospital. So if these demographic changes in the Western world and the developed world are not in their favor, this wall of money is looking for somewhere where you can deploy incremental capital to make incremental return on that capital. And the case for India, therefore, remains very, very strong. And as you said, if you get all these productivity enhancing things and the scope enhancing things, which the Prime Minister has very well articulated, the scale, of course, exists in India, and it's a question of getting this per capita numbers up. And I suspect with the results, one thing which will happen is you will see a lot more push to the bottom of the pyramid for the billion people who are sitting out in our villages and our farms who have not been getting their jobs, to how to accelerate that, because this demographic dividend is not there forever. So I do think the next 5 years is exciting times for infrastructure development, for people who are going to go and benefit from how these billion people translate from, say, bicycle owners to two-wheeler owners. And then, as you would expect, the two-wheeler owners to then come into the car category. So whether it's discretionary, consumer discretionary type things, home improvement things, infrastructure, of course, is an obvious. And my perennial favorite is always banking and financials, because all the streams of income and expenditure eventually flow through the banking and financial space. And asset managers you've seen are already benefiting from those kind of flows as well.
In the banking and financial space, are you partial towards the established private banks? Do you think public sector banks still have a long way to go? The housing finance companies, anything more that you can add to your perennial favorite?
Tamanna, it's in this sort of market where people looking for relative valuations now, financials look very, very cheap. And if you had asked me 2 years ago, do I think a public sector company can sell at a 40p multiple, I would have not agreed with it. Although I own a lot of public sector stocks and I benefited from them, I never imagined we would see 40, 45 multiples for public sector companies, whether it was in defense or allied areas. And therefore, this old paradigm we have that PSU banks can only trade at 1.2 time book is, I think, also going to get blasted out of the water. And at some point, you'll see them trading very high as well. The same way, we couldn't expect, before Mr. Bakshi took over in ICICI Bank or Amitabh took over in Axis Bank, they were kind of dismissed as corporate banks and therefore their lending was not great and so on. And you've seen the transformation in all of these. So again, like I said, it's a rotational market where 5 years ago, the HDFCs and Kotaks were the favorites. And it's swung completely on the other side now to ICICI, Axis, SBI. And then, of course, you can go down to Canara and the others as well. And there's a lot of room to run in a lot of these names.
Manish, one more question. And for at least last question from my end. In a world of expensive PSU valuations, there also exists egregious private sector capex beneficiary valuations as well. Just trying to understand for how long can the rubber band stay stretched, or you reckon that can continue?
So Niraj, if my operating assumption is that we get into bubble, I'm not going to argue with how high these get. I may not need to participate, and I'm very fortunate that I don't have to manage third-party money. Just, we invest for ourselves. And we may not participate in, some things which don't make sense to us. But as an individual who's investing, there are always opportunities in the market. And I'm not constrained by, I must not have 50 stocks or I must not have more than X percentage in a particular sector and so on. But yeah, I mean, it's a brilliant market for a stock picker across the strata. So while mid cap, small cap do look expensive, there are still opportunities there. And even in the large caps, like I said, if the leading banks of the country still look fairly valued, there's enough room to run over there. And eventually, look, we're all slaves to earnings, and that's the weight of profit, which is what's going to eventually determine where we go. In the interim, if you get a bubble, and if you're fortunate enough to participate and also exit at the right time, because you don't want to be left holding the baby once the bubble bursts. So first, let's see how much this builds up to. There's no case for selling India. There's no case for anything to decline right now. It does look like clear blue skies, the typical worries on oil and geopolitics and domestic politics and interest rates look fairly benign. There are tailwinds behind the Indian economy. We have been managed well. There's no reason to believe we won't be. The balance sheets of the government, the corporate sector, the households all seem to be in good shape. So trends are all in the right direction, and trends won't just reverse unless they get pulled to extremes at the larger market cap end of the market, because that's when real big money will be made or lost. So I think we're still heading upwards in that trajectory.
Got it. Viewers, keep in mind, there are some videos that Manish Chokhani has done with us as well, wherein he talks about if you can't time the top, then do some bit of technical analysis, wait for the wave to come off, and all of that. You might want to read that if you think of egregious valuations. Sorry, Manish?
Niraj, now with the algorithms, I think they don't give you that time. So you can't size up quickly on the way up and you can't exit quickly on the way down. So the algos get much faster now.
Yeah, just one at least my final question, Manish, and that is we speak about this, right? Domestic economy doing so well. What about exporting themes? Each of those have some issue. Chemicals have an issue for a while now. IT is just starting to look, for lack of a better word, very, very passive in the recent past because of the AI challenge or what have you, and the banking issues. So, and you speak about the rupee strengthening as well. Just trying to think, what about export-oriented themes?
Look, again, I'm sitting in a country which has the most expensive currency in the world, and they haven't stopped exporting. Even you'll buy their chocolates because they're just so good. So we need to transition from being cheap processors for the world to producing goods for the world. And I'm enthused by the work being done by people at iSpirit, where we say we will set the standards and we will own the kernel on which the platforms and then the products are made. And if indeed the Prime Minister is thinking in that way, you've seen how they backed the 5G, creation of the 5G network with Tejas and others of their ilk. That sort of thinking, when it comes in and permeates, that's when we lift off on our exports. We won't become a large number 3 economy and then a number 2 economy and then a number 1 economy on the back of just being backroom boys for the rest of the world, whether it's with global capability centers or IT services, which are all fantastic and required. But we have to go up the value chain to the next level. Same thing applies to chemicals. Same thing applies to pharmaceuticals. Same thing applies to engineering goods and services. Same thing applies to automobiles. But I think a country will not become third largest unless you start seeing Indian product out there in the world. And you're probably then driving an Indian car or wearing an Indian watch or wearing Indian garments or whatever. And also the whole gamut of services and tourism, which I think is really a big deal in the country. And that's one of the things also which the Prime Minister has been stressing on to get your religious tourism and your adventure tourism and all of that happening domestically in India and build the infrastructure for that. We will attract masses of people coming from overseas as well.
Manish, this is really the final question. I know we've been saying it for a while, but I'm going to just do a follow-up of what you said earlier, which is about lifting the bottom of the pyramid and how that becomes crucial. I would say it's, in a sense, something that politically we will see focus on. The first 2 announcements from the government, even before the portfolios are out, have been focused on this segment. What, in your view, can be done so as to not displace the fiscal deficit balance, not seem like we're veering towards populism, but truly make a change?
I don't think this government, by its nature and instinct, is a populist government.
Yes.
Having said that, remember, Chandrababu Naidu also had lost his election in his earlier term because of his excessive focus on urbanization and so on. But having said that, I think the solution for the agri-distress is not to fix agriculture, because there's only that much produce and only that much output and productivity you can get per acre of land. The solution is what has been repeated across the world, is to urbanize at a faster rate and get people off the farm. And in the farm, you have to do a lot more value addition with food processing and packaging and then productizing and so on. I think these 2 trends are well understood by the government. And therefore, I don't expect that you will see a slowdown in the urbanization rate of the country. But I do equally feel you will see a lot more stress on value-added agriculture to take place. And therefore, I'm still hopeful, although I know the rest of my brethren in the market don't believe the farm laws will get pushed through. I remain hopeful about that was something which would have unleashed the productivity of our farmer and allowed them to play to their benefit in terms of market-driven prices and so on. And it was stymied just by that agitation in Punjab and maybe parts of Western UP and so on. If that comes through, I think that's really going to be the solution for the farming distress. The other one, of course, was labor laws, which were already passed by Parliament, which have to now get enacted across different states. But these are the 2 big things which have to be done from a voting populace perspective. And from the rest of the country, I think when he speaks of speed, is this administrative reform and judicial reform, which is kind of clogging up the wheels and preventing us from moving faster. Again, the way they digitized the IT system and got a lot more throughput going through faster. I do hope and believe something like that would come through for the rest of the administration, especially for the judiciary, where I believe some 60 or 62 million cases seem to be clogged up in our courts. And if you can use AI intelligently over there, and it won't happen overnight, but when we look back 5 years from now, the way we look back at what happened with GST, I would expect dramatic changes to be made over there as well.
Fantastic, Manish. Always a pleasure to speak with you. Thank you so much for joining us this afternoon. India time, we're waiting the portfolios, but I think that's going to be just one more leg of that story, which is pretty much set and clear as a direction for the markets. Thank you again for speaking with us.
All the best. Thanks.
All right. Manish Chokhani there, and what clarity as well on what to expect. I mean, I don't know if farm and labor are really going to push through. Maybe repackaged. Farm laws may be repackaged. Same impact, but doesn't seem unpalatable politically.
Yeah. So one is the unknown, which is the political end. One is the hypothesis, which is that if indeed flows start coming into India in a big way, both bond markets and equity markets, and what it does potentially to the currency, if not appreciate very quickly, at least the stability that it may get, and what that might do to a clutch of things on the investment side is quite stunning. So great to have that thought as well. And that's the thing about investing, I guess, Tamanna. You make a hypothesis and then test it out. Manish has his, some others have theirs. Could be interesting to see how it shapes up.
Yeah, but I mean, people are interested in hearing his hypothesis because of the success rates that
Most
come out
certainly.
of it. So that's there as well. Very, very quick break, but we're coming back with the F&O picture. We're also coming back with what is the buzz this afternoon as we wind down to trade. Stay tuned.
Back with India market close right here on NDTV Profit. The fact remains that fertilizers and chemicals Travancore is right up there in the list of gainers, but fertilizer stocks are having a field day today. Amar Dev Singh has been patient with us and Amar is still waiting. Amar, I know we spoke about the derivative space and I would love to a question or two on an option strategy that you may have, but just a quick question on the fertilizer stocks and the way they are moving today.
Yeah, I would say fertilizer stocks have been performing exceedingly well over the last few trading sessions. We did witness some extreme movement on the, I would say, election results, but the trend remains very strong. If you look at Chambal fertilizers, for that matter, we see very strong upside potential there. It has the potential to rally if it sustains above the 440 level. Then the stock, because if we go back in time, the stock at a point of time had made a high of 516 in the second quarter of 2022. So there is, I would say, positive movement being witnessed in the fertilizer space. So any dips can be used as a buying opportunity. As far as Chambal fertilizer is concerned, sustaining above 440, the stock has a potential to rally anywhere between 15 to 20%.
Okay. Amar, any option trades on the index or any of the specific stocks?
Yeah, I would say as far as index is concerned, Bank Nifty, one can definitely look at buying a call option. So on the 50,300 call option, one can look at Bank Nifty. That is one opportunity which one can look at because overall, if we see Bank Nifty, what we are witnessing is that Bank Nifty continues to remain strong and firm. So if we look at the current pricing, it's around 150, 157 odd or so, 157. So this is one strategy one can look at buying a call option at the current level with a stop loss below 100 and a target of on the upside towards 350.
All right, one sector which we should focus on, and the auto numbers which came in the beginning of the month kind of got lost and drowned out in the election noise, but the FADA data for the month are out. The numbers also indicate how retail auto sales have actually cooled off in the month of May. Tushar is telling us why. Tushar, what was the trigger there?
Yeah, Thank you so much. So retail sales actually cooled off, Ahmed, because the reasons that were cited were the heat wave that was in the month of May, as well as the election campaigning that was happening. Those are the primary reasons that FADA is giving for the dip in footfalls at showrooms across dealerships in India. So quickly through the numbers, car retail sales are down 1% year on year. Month on month, compared to the month of April, they are down about 10%. The commercial vehicle sales are up by 4.1%. Two-wheeler retail sales are up by 2.5%. But three-wheeler sales are actually up by about 20% given the low base that it has. So clearly, there has been a muted sales growth in the month of May. So overall, retail sales are up about 22.5%. Remember, the retail sales have to be also taken in consideration with the inventory that we have been seeing. There's a pile-up of small cars that's happening at Indian dealerships. We spoke with somebody at FADA about a week ago, and they said that the inventory levels are about 5 lakh units as of 31st May. Quickly through the companies, if we go through it, we see that Maruti Suzuki has grown its numbers, retail sales, during the month of May, whereas its peers Hyundai, Tata Motors, Mahindra have seen a decline. Now that's on the back of the new Swift that was launched last month. The company has already garnered about 40,000 bookings of the new hatchback. Coming to two-wheelers, Hero MotoCorp has seen a steep decline in month-on-month on year-on-year sales as compared to last year. They are about 4.45 lakh units from 5.3 lakh units. The big gainer was Honda, an unlisted company, which added about 1.2 lakh units in that month compared to the previous year.
Right.
Another one is about Royal Enfield, which is down about 6,000 units.
Sure. So we're getting the overall picture there. Thank you so much for that, Tushar, there with all the details of what the auto sales look like. Bajaj, let me see if it's still doing okay. The first half of the day was pretty good for a Bajaj auto. And yeah, it's completely flattened off its day's highs. Deven Choksi joining in on our conversation this evening. Deven, very good afternoon to you. Great to have you on. You're seeing excitement in some railway stocks, some fertilizer stocks. Of course, the housing finance pack completely buzzing because the first cabinet decision is likely to be, 2 crore houses being sanctioned in the Awas Housing Yojana scheme. I just want to get your sense if any of this clutch of stocks looks interesting to you?
Hi, Tamanna. Good afternoon. Well, I think no denial of the fact that I think the excitement is always there in the market. Continuity of the government, continuity of the allocations of the budgetary allocations which the government had earlier spelled out, I think is likely to be there. And I think the spending towards infrastructure, spending onto the PLI schemes, spending towards boosting the consumption, all of these are, I think, actually are good numbers, I think, are good measures, I think, that we are all asking for. However, I think the speed at which the companies are fetching the values and I think the valuations are getting stretched is very, very uncomfortable, honestly, because most of the things are priced in. And as we see the market today, this market is basically assuming a character of buying for position and selling it out, which means I think that everything in the portfolio is on a rotational basis, which to me, I think is not very comforting, honestly, because you do make money in this kind of a momentum-driven market, agreed. But at the same time, I think neglecting the fundamentals and the value and the valuations on which I think you're riding this market is probably not something which is very comforting. But nonetheless, I think the good time ahead for some good quality stocks from the investment perspective.
Good afternoon, Devin Bhai, and just wondering, some of the everybody's talking about themes which may or may not do well, may see continuity or no. I think the one common theme that everybody's spoken about is power, not just because there's a government focus there, but because there's a need, because we are looking at peak power deficits in 2024. And even if you're a Mumbaikar, you suffered that in the recent past. Just wondering whether what within that power ecosystem do you continue to like?
Yeah, Niraj, good afternoon. Well, I think the one space which we have been holding on to and we always love to hold on to is a distribution space, the transmission space. Particularly the transmission space, I think, is one where we probably remain very comfortable because the transmission space, I think, it's no doubt capital intensive business, but at the same time, I think the higher amount of cash flow that it generates and it retains is something which is fundamentally very important. look at the companies like Power Grid, or for that matter, even Adani Energy Solutions or the transmission, which we used to call it earlier. I think the companies have been generating significant large amount of EBITDA and have been in a position to do the expansion in a much systematic manner. So I think this is one space definitely I think remains one of our favorite. The other area which gives us confidence is because of the controlled cost of coal, particularly, as a result of which the thermal power production is remaining highly advantageous to the companies like Tata Power or even Adani Power kind of companies, or even NTPC for that matter. So they remain in a comfortable zone at this point of time. Yes, I think the expanded capacity is definitely helping them in form of higher number of units at the same time with the controlled energy input cost. So to that extent, I think the space remains fairly comfortable from the investment point of view.
Okay, well, interesting thoughts there from both our experts. We need to slip into one more very quick break, but we'll come back, tackle the last 18 minutes of trade, and with some stocks which are really flying around and maybe some which are not. Stay tuned.
All right, just about 15 odd minutes to go for markets to close. Amardev Singh and Devin Choksi with us this afternoon as we wind down to what is, I would say, been an unexciting day of trade. Everyone's happy, it's positive, but no one wants to do much. Possibly another trigger is being awaited, and that could be the portfolio distribution. But in the interim, Amar, what would be your top calls this afternoon, either for the remainder of trade or if you wanted to take a position for tomorrow?
I would say one stock one can definitely look at is Ramco Cements. This is one stock which we are seeing that the stock has taken off after a consolidation, because earlier the stock was unable to breach the 750, 760 mark. Currently it's around 880. And what we are seeing is that the stock has taken out a crucial zone of resistance, which was around 860, 870. So sustaining of the current levels, the stock has the potential to rally towards the 950 level. So this is one stock one can look at. The stop loss needs to be below 847. And the second stock to look at is, again, it is JK Cements. This is one stock one can look at. JK Cement is another stock one can look at. That again remains strong. And the third one to look at is JK Paper. This is one stock which has a potential to rally significantly if it sustains above the 440 levels. So sustaining over the 440 levels, the stock has the potential to hit its all-time high, which was around 500 levels. So that this is the next stock one can look at.
So JK Papers, Ramco Cement I thought was interesting. Ramco Cement also in the news because of its location. in Andhra Pradesh, which has made it attractive for those who are betting on all of the TDP stocks. Now, another one of them is Heritage Foods, and we have to talk a bit about Heritage Foods. It's gained once again another 5% today on the back of a large block deal this time. But that's not just it, right? If I pull up the chart for the last, actually from June 4th, or even the last 1 week, Heritage Foods has had a massive up move. And the reason is that members of Chandrababu Naidu's family are on the board of directors. So it is definitely a family enterprise. Let me go across to Mahima, who has more details. Mahima, what has been the run-up that we've seen in Heritage? And give us a snapshot of the fundamentals of the company.
Absolutely, Tamanna. I'll start with giving an idea of how the large trades have taken place today. 44 lakh shares exchanged their hands today. Around 4.8% equity was exchanged today, and the average transaction price was approximately 725. Now, in terms of, like you rightly mentioned, the Heritage Food ownership, it was founded by Chandrababu Naidu in 1992, and his entire family are promoters of the company. In terms of shareholding pattern, if we see, Bhuvneshwari Nara, his wife, holds around 24.4% stake. Nara Lokesh, his son, holds around 10.8% stake, and as per the affidavit filed by him, he owns around 2.26 crore shares. His daughter-in-law, who is named as Brahmani Nara, is the executive director of the company. Now, a bit about the company itself. It has two divisions, namely dairy and renewable energy. For FY24, the operating income was up around 17%, EBITDA was up around 52% YOY, and net profit was up around 84%. They've also had multiple new product launches recently in terms of ice cream, skimmed milk, Tetra Pak, various variations in the fresh milk and flavored curd as well. In terms of distribution network, they have around 432 milk distributors that were added in Q4, 33 VIP distributors, and 11 fresh value added product distributors. And lastly, in terms of stock performance, as you rightly mentioned, the stock has rallied. Well, in the past 13 sessions, the stock has almost gained 100%, and since 4th of June, the stock has been up 55%. So this is the overall wholesome view of Heritage Foods.
Okay, so that's the take on Heritage Foods. Deven, I was waiting to come to you to speak to you on Ramco and Heritage Foods both. They're part of the list of so-called TDP stocks. Do you like any of them fundamentally?
So cement as a space, I think we definitely like, and the regional pockets, particularly where the Ramco is operating, definitely demands an attention. Largely because of the fact that I think government's allocation towards southern states is going to increase in this particular period, and that's where probably we are likely to see the higher amount of construction activities also continuing. As such, on an overall basis, if you look at whether it is a low-cost housing or whether it is a rural housing, or whether, for that matter, I think the premium housing, commercial estates, all of these plays are going to play out well across the country. And that's where probably I think you are arguing that some of the companies in the regional space, which are dominating regional space, like Ramco Cement, should be in a far better position going forward. Whether I think it all translates into the earning immediately, answer is no. Maybe I think one can possibly, after this narrative gets cooled down, or maybe after this euphoria gets cooled down, this narrative may pick up eventually. So I think we'll wait and see overall. But we remain positive about the cement as a space is concerned.
Amar, a lot of these cement stocks have done so well today. I mean, Ramco is one case in point, but Ultratech is the top gainer. Some of the others have flown around as well. If you had to initiate a fresh trade in cement, which stocks would stand out?
I would say Ramco definitely stands out, and also Ultratech, as you spoke about, because if you look at Ultratech has taken out a crucial zone of resistance, because earlier it was unable to breach these levels of 10,500 and sustain above that level. Now we are seeing that the stock is trading at its all-time highs, and also if you look at the stock on the long-term charts, on the monthly charts, quarterly charts, the trend is very strong. And even in the weekly charts, we've seen consolidation and a breakout on heavy and significant volumes. So now 10,500 becomes a crucial zone of support. So anyone looking at a buying opportunity needs to have a stop loss below that level. And since the stock is trading at its record highs, sustaining over the 10,500 mark, the stock has the potential to rally towards 11,500 levels.
Okay. Well, And Ultratech is 3.5% higher now, but Ramco too, really standing out. So let's see how the cement stocks behave moving ahead. You know, the thing about today is that while there is this set of gainers which are doing so well, there is also a set of stocks which have lost out in the session today. Some NBFCs are correcting in trade. Poonawalla FinCorp, I couldn't figure out the news, but down about 8%. Some others too have corrected. Financials just about, they're not quite really perking up as much as they should. Would you buy into any of the financials now? Would that be the number one buy idea because of the valuations? And if so, what do you like the most here as a house?
Yeah, Niraj, I think it's absolutely perfect to go into the buying of these financials. Largely because of the fact that their credit growth is continuously improving. Even if you see the last quarter's results of Poonawalla, which you mentioned, I think the numbers have been absolutely very comfortable, very stunning numbers, in fact. And also the fact that the interest rate scenario is likely to be, I think, softened going forward. We feel that I think some of these finance companies would remain really strong. Like so, Bajaj Finance is a very, arguably, I think, a very strong case because 32% kind of a growth in AUM in the retail lending, and at the same time unlocking of the value and building the valuation in the books through the housing finance subsidiary. They are all, I think, very positive indications about, I think, this entire space as a whole. We continue to like the neglected ones, which are basically available at corrected valuations, likes of Bajaj Finance, likes of Kotak, and even for that matter, NDTV, because we believe that every 3.5-4 years time, I think these companies are likely to double the size of the balance sheet organically with around 20% odd kind of a growth. Should this be the situation continuing, I believe that I think some of these companies cannot languish or remain at this level for a very long period of time. I would think that I think there is going to be a re-rating on the cards for many of these companies, having seen fundamentally good performance in most of the cases.
All right, stay on with us, Deven and Amardev Singh with us this afternoon. Now, the big event really to look out for is the distribution of portfolios. Now, common sense or a guesstimation would be that if you're having your first cabinet meet at 5, you'd probably have portfolios out by then, though there is no, compulsion to do that. But nevertheless, it was an interesting day where Prime Minister Modi assumed office for a third straight term in his South Block office in Delhi following last evening's swearing-in ceremony, where he led a 72-member Union Council of Ministers into office. Vasudha is joining us to talk to us more about the cabinet meeting that we're going to have at 5. We're already learning that there is going to be a push for the Awas Yojana scheme. Yes, Vasudha?
Within hours of the Prime Minister sworn in as the third Prime Minister of the country, creating history, he has actually taken charge of his office today at the South Block in the Prime Minister's office. And the first file that he has signed is of PM Kisan Kalyan Nidhi. This is a scheme, this is a welfare scheme, the flagship agricultural scheme of the government, which of course, intends to reach out to several farmers. This has been going on since 2019. And I remember this is one scheme that, unlike Ayushman Bharat, has never been a point of contention, even with aggressive opposition parties like TMC, with Mamata Banerjee herself saying that this is something that her government wants. The Prime Minister, by making this move for farmers, is sending out a larger message of reassurance to the farming community. Farmers know no geographical boundaries. Farmers are present across the country. This is an emotive subject. Annadata, is considered an emotive subject for the country. And more importantly, they're also seen as caste agnostic. The opposition party, Congress, specifically talked about legal MSP in the run-up to elections. They, in fact, promised that in the election manifesto as well. So this is the BJP trying to reach out to the farmers, not just ahead of Haryana elections, which are slated to happen later this year, but also across the country. And this is a symbolic move with heavy political undertones. The Prime Minister has taken oath at 11:30 today, which is just a few hours after he was sworn in as a Prime Minister. There's a cabinet meeting that's scheduled to happen at 5 p.m. So this is Modi 3.0. Governance has started with a sense of urgency and a sense of expediting, administration and governance. 72 ministers have been sworn in yesterday. We are waiting for the cabinet portfolio list to come out from the Rashtrapati Bhavan anytime soon. The cabinet meeting today at 5 p.m. will also set the broad contours of the governance agenda. The Prime Minister, in a closed-door meeting with the ministers, the new ministers yesterday, specifically said that even if you come to Delhi, don't let arrogance get the better of you. Focus on your states, focus on the people who voted for you, and also people who didn't vote for you. He asked them to specifically finish all the projects on time and not leave anything hanging to fate. So clearly some very clear instructions to the ministers, and specifically two things: the 100-day agenda and also Viksit Bharat. With the cabinet meeting happening today and the cabinet portfolio list coming out anytime soon, there is an expectation that we could get some clearer picture of what the governance could look like.
All right, thank you for that comprehensive response, Vasudha Venugopal, on top of that story from the NDTV network. And of course, while we await that, just a few minutes left for markets to wind down. Let's wrap up with one top call from both our experts today. Deven, can I start with you? What would be your one big call for tomorrow?
So I don't know about tomorrow, but I feel that I think the interesting proposition or investment case is very, very strong in Geofin. I think this is a company where we are seeing unfolding of the entire business model in successive quarters from now. And that's where probably I think one can stay long for a directional call in this company.
Geofin, okay. And Amar, if we had to ask you for a closing strategy, would it be a BTST or STBT, and what would it be? Amar?
I would say one can look at Karur Vysya Bank. This is one stock one can definitely look at because if I look at the stock from a medium-term, long-term perspective, continues to be very strong on the daily charts. It has broken out of a major zone of resistance. Earlier, the stock was unable to reach the 205, 210 level. And today, on significant volumes, the stock has breached that level. So this is one stock definitely one can keep a close watch on because the stock has a potential to rally towards 240 to 45 levels. The stock has now got very strong support coming around the 190 to 200 zone.
Okay, thanks a lot for that, Amar. Thanks a lot for that, Deven. Really appreciate your time, gentlemen, and your thoughts, of course. As we start wrapping up the markets, pull up. Remember the India VIX should come up on your screen as well, aside of the Nifty, because we've cooled off, but there's no alarm bells. Yes, we were higher, but we have spoken about it in the morning. It's very difficult, I think, for global markets to be in a direction ahead of the FOMC meet, to be very honest. Volatility's come off again, and I think post this, we're now at 16.43, going back to those levels between 10 and 15 that we were for such a long time. It only spiked during the elections and has come off completely, has India VIX. Bring up the market breadth, and I think the breadth is still looking okay because the small cap index, never mind what's happened to the large caps, the small caps have still looked okay, and which is actually a good sign. And then let's get the heat map up on the screen. Small caps up 1.23%. Now let's get the heat map up on the screen, if not the market breadth. But this also gives you a sense of the market breadth. Yes, there is a lot more red than what it was. And yes, a lot of IT stocks are sulking even more. M&M2 is down about 1%, but it's largely, predominantly led by IT correcting significantly in the session. What's done well? Well, Ultratech right up there, and it's just symptomatic of what cement has done. There are not too many cement stocks on the index, mind you, but if you look at across the board, the Ambujas, Ramcos of the world, they've done reasonably well. Cipla, Hero, Power Grid, etc. shows the defensive bent of the market today on a day when IT is down, HDFC Bank is down, and therefore Bank Nifty 2 is not participating. Tamanna, mid caps and small caps. The small caps are the shining stars.
The shining stars, yes, but that too also in pockets, I would say. The market breadth is decent. The advanced decline ratio very clearly shows that, narrowing slightly over here, but nothing too much to worry about. The front lines of their highs, but just let's quickly pull up the mid cap and small cap and see how they're looking poised to close down. Relatively, yes, I would say small cap 250 definitely the shining star, 1.5% up. Mid caps all right, completely flat. But what are the pockets of stocks that are working? We were talking about FACT, fertilizer stocks definitely in that list. 14-15% up. Let's look at all of your housing finance plays, because we know that's going to likely come up in the cabinet. We heard that report from our colleague Vasudha Venugopal. So Aadhar, HFC, they're doing very well. Hutco is the other one, 7% up. So you have this category of stocks, Niraj, which are in focus, in favor, and possibly will continue to be.
Yeah, very likely going to be the case. We just wrap up with, maybe if you haven't, just show the BSE 500 winners and gainers list, and just shows really the way the broader markets have moved on a day when the indices have been flat, and then we wrap up the show. But yeah, I think Motilal Oswal has, of course, an adjustment to itself, and which is why that thing 1:4. But rallies, and just shows how the fertilizer stocks were very active on the PSU side, and on the losing side, Suzlon and some of the others on news, emphasis on that block deal, etc., correcting quite strongly.
Yeah, so that's the long and short of it. It's been an interesting day overall, but not one where there have been any big, bold moves. I think everyone waiting to see what the portfolio distribution looks like. Will that news come in a short while from now? Will it be later tonight? We can't really say for sure, but we have our eyes on that story, so you know where to stay for all that information. But for now, from Niraj, me and the entire team, thank you so much for joining us. A lot more coming up on the other side.